This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 9:02 p.m. right on time on September 22nd, 2019. We're coming to the end of September, just pretty much just a couple of days left to the end of the month. In fact, the last day of the month is last day of the trading month, and the last day, which is very of the third quarter. So keep that in mind. The third quarter, Q3, is Monday, September 30th. On that note, we shall begin. Full disclosure, as always, this is purely for financial education, not for any solicitation or advice. These sessions are recorded, uploaded to the Google YouTube channel for further viewing by members, free trial subscribers, as well as anyone out there with the internet connection and a thirst for knowledge to try to understand why markets do what they do. Very precise, very accurate, and very real. No fake stuff here at Clueless Day Trading. We always have credited ourselves with that we don't talk about, we don't make up stories. We don't give out garbage. We give the facts as they come. We try to sort out the tea leaves and try to read the signals in between. It's never that easy and it's never that hard, but that's the markets for you. You just got to keep a calm head and move on. The minute you get out of the markets, the minute you step aside and say you can't do it, because that's what the voice in your head always tells you every time you're doing a trade or coming into the stock market, whether after a couple of years or whether a couple of days or a couple of weeks, the fact remains, if you're not engaged with the US financial markets, well, you're never going to make the money. It's just the way it is. So you always have to engage. It's an ongoing battle. As the old saying says, it's not a sprint, it's a marathon. And if you stick to it, net, you're going to win. Okay. On that note, we have some members filtering in. We have Dominic, we have Mike, and whoever comes in. Of course, it's Sunday, 9 p.m. Eastern Time. It's pretty early out there in the Midwest as well as the West Coast. So let me just make a simple point here. A couple of things here, that I just put out just as a cover thing before we get into the nitty gritty of the forecast and talk about some stocks and things like that. And Dom, if you don't mind, if you can just mute yourself for a minute because I'm getting, I guess, the echo from my voice, but not a problem. So the key is, let's face facts here. The markets are extremely volatile. It doesn't matter that we're 1% away from all-time highs. The fact that the market's bumping and itching to make a new high, it doesn't feel like that, does it? And that's the nature of the beast. And when you accept that, and when you accept the, like I saw this quote on Instagram and I copied and pasted it, the key to growth is acknowledging your fear of the unknown. And that fear doesn't have to be negative fear. Like I said the other day on one of my brilliant quotes that I put out there, through the say trading motto, that it's all about positive stress. But if you're not stressed, you're not going to make money. Period. If you think it's just a cakewalk, you're just going to get in there and just, oh yeah, this is a absolute definite trade, then you're never going to make those 200-300% returns on your ROI, return on investment on your options, or 10, 20, 30% on your small stocks, 5-10% on the bigger stocks, intraday 40-60%. You're not going to do it. You always have to have a level of stress. There's no question about it. And the more you accept it, the better off you're going to get at it. Is it going to make you feel comfortable about the massive volatility in the market that we incurred last week? Within a tight range, of course. I mean, not that tight a range, a pretty wide range. No. Is your P&L going to look green every single day? No. Are you going to have certain things which are going to be up 200+%? Case in point, AT&T, which we actually presented as a and has been a net winning alert in the past 10 days and including on Friday. Sure. So that's the stock market for you. What the market is doing right now, just so you all understand and get this clear through your head, it's acting like a stock market. So what does the stock market mean? That just because the markets are up, everything's going to be up? Nope. It's not going to work like that. There's multiple sector rotations that go on. And one of the things we want to talk about is why are these tech stocks, some of the real growth engines of the US economy for decades now, why were they getting slammed? For literally no reason. What, all of a sudden they all just lost their earnings potential? That they're not growing? No. And I put out a fantastic article that I saw, and I said to myself, this is great, because this is the way I was thinking, and it came through. And please, if you want to really enhance your knowledge a little bit, and it's not about just being a smarty pants in the market and knowing everything about the market, but it helps your trading. That's really what it comes down to. What it really boils down to, your P&L at the end of the week, and hopefully at the end of the day. So I hope some of you read it. And like I said, if you don't, that's your disadvantage, not mine. And that article had to do with this. Bear with me 1 second. There you go. Okay. And I said mystery solved. And I said read immediately. Hey, look, you guys are not kids. You know, I'm not reading you bedtime stories. But if you want to really understand and then be prepared, because you know what? Everything that was sold in panic by the majority of investors, including the media, keeps on talking about it, everything's going to hell in a handbasket, that China deal is not going to come through, and all that stuff constantly, that the Chinese delegation cut their trip short. That's all garbage. And it was refuted today by the Chinese Agricultural Ministry, which said, no, these were very constructive talks. So futures are up 15 points. They're probably going to be up 20 points by the time they're all said and done, unless we get something happening overnight. So let's accept it. So this article here, where it says the stock market rotation that rocked investors this month may have been driven by technicality. Now, what rotation are they talking about? They're talking about the rotation out of powerful, high growth, high earnings growers, technology companies, into value, defensive stocks, the Clorox and things like that. So those companies, by the way, the value stocks, which are the defensive stocks, they don't grow at 20, 30%. They grow at what, 5, 6%? They're at their highest valuation, meaning their prices are way up there, because they're all hiding in there, all the so-called smart money. And I do say so-called smart money. So what's happening is they got out of, they're selling these apples and stuff. Amazon's down a gazillion, like 50, 60 points in 2 days. And you're going to, you know, and just to give you an example. So this was the reason why. So please read it. The stock market rotation from value into tech. I mean, from out of technology to value stocks, boring defensive stocks, which are not even growing that much, but it's a good place to hide because they have nice dividends and stuff. So caused by a technicality. And I'm not going to get into it. Read it yourself. It's fascinating, and it's a fact what happened. It had to do with tax loss harvesting, some rumors that, I'm giving you a little hint on it, that President Trump was going to cut the capital gains tax. So they wanted to get out of the high growth tech stocks, which have gone up a lot, so they could pay lesser taxes and then go hide in the defensive stocks. So fascinating article. Read that. The other thing that happened, which is very, very technical, is and I don't want to get into it right now, it's going to take half an hour to explain, is about the bond market, about overnight repo market. What is an overnight repo market? They're not repossessing your stocks, right, or your cars. The overnight repo market is when companies borrow for short-term overnight lending, overnight obligation, overnight lending rates. Companies borrow from the Federal Reserve, or banks borrow from the Federal Reserve, okay, to meet their lending obligations. So the repo market went a little haywire. Short-term rates went up quite a bit. So the Fed had to step in and stabilize that market repeatedly. It's a very technical issue. Now, why that happened? There are many different reasons. So the fact is that caused turbulence in the market too. Now, these are high-flying stuff that the average trader doesn't understand, doesn't want to understand, but then they wonder why the market's going down. They all get super bearish, like really super bearish. So everything that was sold in a panic by the majority on Friday, they're all going to open up 5, 10, 15 points higher. Amazon's probably going to open up 15 points higher. And this is a common recurrence in the market over and over. And there's nothing we can do about it. So on that note, and please stop me if you have any quick questions. On that note, my charts that I put out there, and I'll put out just be, real straightforward like I always am, is don't expect every 15-minute, every hour chart to be exactly what the technicals and the structures that I draw on it. Because when the markets go random, I mean haywire, and this was since the 15th, in the middle of the month, okay? This intense volatility is not something that anybody can manage very effectively on a hour-to-hour, day-to-day basis. I mean, this, oh yes, we can see a pattern. Sure, we can see a pattern. And we have played these patterns reasonably well. But to see a massive drop because of some BS bullshit, excuse my French. It's New York French, by the way. Okay, rumor. And this lady from Montana saying, oh, the Chinese ain't coming, blah, blah, blah. So? And then the Chinese Agriculture Ministry over the MOFCOM, they call it, a very powerful commerce ministry. They said, no, we're going to be buying more. It was very constructive, the talks. Because if you noticed, because the market's a manipulated beast, all right? They want to scare the living crap out of you so you get out of all your positions, especially retail investors who are always changing diapers. Institutional investors who are always, trying to talk their own book, and in most cases, they're bearish. Then you got the big shots who always think the U.S. economy is going to hell in a handbasket. All right. So what happens? It creates massive volatility. We just suddenly got this massive drop on that rumor. And I was wondering, like, why are we hearing any news about this major meeting that is between the Chinese junior trade negotiators sitting in Washington, D.C. and U.S. negotiators? Doesn't it seem a little bit, it's not weird, it's complete manipulation. The government manipulates the market, no question about it. President Trump manipulates the market, no question about it. His every tweet manipulates the market. But he is a market bull. He doesn't want the market to really crash and burn. It's not going to do anything for the GOP win in 2020. I'll tell you that right now. Doesn't matter how tough he talks. He doesn't want the market to go down 4,000 points. All right? But this hidden hand of the market, whoever they may be, it's not like a little cabal sitting somewhere in a dark room in Little Italy, how come no news came out? How come nobody was talking about anything? And then the Chinese comes out with their announcements that it was a very constructive talk, all this stuff, that they'll be re-invited back again, and it sets the path for the major talks, coming in mid-October, I believe. So coming from the Chinese, it actually carries a lot more weight, because a lot of the times we're basically mounted off, hot air, and the Chinese just say, what are you talking about? Right? You guys know that. And the markets are like, wow. But it's coming from the Chinese. That's the reason futures are up 15 points. Just so you know. Because the market is believing less and less, in a way, coming out of, and this is a fact, and this is the reason why we're getting this type of monstrous intraday, intra-week volatility. Okay? Is the markets we're actually having a quick breakout of this major downtrend line, as you all can see. So I'll highlight that. And we know exactly what levels the market can go to and where they're going to get, where the sell program is going to come in. That's why these charts are so extremely important. So if you have time during the day, you can actually make a little decent money with smaller amounts of money. I wouldn't recommend, but then I don't recommend, I just suggest putting in big sums of money on these big moves, because suddenly you get these massive sell programs. Or if you're short, suddenly you get these massive buy programs and you get blasted. So small gets big. So what I was saying was, Wall Street, and not just Wall Street, the overall market participants are, and it's called the law of diminishing returns. They're not giving that much credence, as they used to, of comments coming out or tweets coming out of President Trump or comments coming out of the White House anymore. Because one of the most frustrating things about trading and investing these types of markets, and the big overhang of this massive US-China trade war, but at the same time, lots of constructive stuff is going on. One of the frustrating things is a lot of the administration members talk from all sides of their mouth. one guy says, hey, things are going well. The other guy comes out and says, well, it's not really going well. So what happens? You get massive volatility. So there's nothing we can do about it. There's nothing we can do about it. So we have to manage our trades as best as we can. We have to be selective. We have to get out of position when we're down too much, or we look at these charts and we say, should I really dump everything right here where we have massive support and long tail hammer reversals and all those technical mumbo jumbo that I put out there? And you guys can easily see that. Forget about the lingo. I mean, just look at the pattern. We have a wide trading range of around 29.84, 29.80, and then this. And in between, most of the larger stocks will trade accordingly. And the selective stocks like some biotechs, selective things like GameStop, which are longer term swing trades, AT&T, which I probably trade like 3 times in my life. And sweet. Okay? Cheap calls, big money. So those will do their own thing. But this is the range that we're in. So now you know. So let's get into it. And then we're going to look at a couple of stocks and we will wrap it up. So first of all, I don't want to keep on explaining the obvious like I do, because I'm sure you guys are all smart enough to see it. You don't need smartness, you just need eyes. We are moving within a range of 30.24 and on the bottom end 29.80. So that's 24 and 20. That's 44 points, 44 handles on the E-minis. So what's 44 handles? Multiply 44 by the larger factorial of 8. So 44 E-minis or ES translates on the Dow Jones Industrial Average on the Dow Jones to 352 points. So this wide band where this crazy dance is happening in between very specific things, Fibonacci retracements, kisses the 50 Fibonacci, which is basically where markets normally tend to gravitate towards, and then where the big breakouts happen. This is exactly what's happening now. This is where we closed on Friday. So 352 point range. This is a 352 point range. So first and foremost, one thing I've learned about trading, and I am totally self-taught, even though I've had the opportunity to listen to some of the top technical analysts like Tony Dwyer and other people back on my days on Wall Street, is that you have to accept the unknown. And in between, you're going to make some money. Okay? Sorry about that. That's my writing board clicking out. So, sorry about that. Okay. So saying all that, this is where we are. So like I said, everything that was sold in panic, whether they be the IWM calls, whether these be SPY calls that I kept on saying bye, I know you get cheaper and everything's looking red on the P&L side and all that. They're all going to be up big. Futures markets were down on Friday. Actual S&P was down about 14.76. Let's call it 15 points. Futures are up right now 16 points. Wow. Isn't that funny? We're down 15 at the close on Friday. Looks like everything held in the handbasket. And now we have taken all that, pretty much, taken all that back. So that's another thing that I wanted to explain to all of you, which many of you some of you, I believe, refuse to accept. A lot of the action that you're going to see, and that's the reason why technicals are so important, where all those different things that I show, deep oversold condition, almost getting there, blah, 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 that a lot of the movement in the market will happen in the Globex overnight markets. So by the time you think you can chase and win during the day, you're not going to do it unless you have some position from the night before. There was some statistics put out there that's a 1 hour chart. That's more of the longer term chart on the overall markets. And it really looks like nothing happened, right? This goes back to August. So the statistics said that 90% of the gains on the overall SPYs and SPX happens overnight. So if you're not positioned, you're not going to make that. That's not totally true, because those volatility moves that happen during the day, you can actually make some very decent money. This started off at 2:30 in the afternoon. This was the Fed thing where it blasted and we were in it hard. The big fake sell-off. And don't expect to understand these things, because you know what? There's nothing to understand. These are black swan events, unquantifiable, algorithmic, high frequency trading black boxes, just doing things to screw you guys up. That's serious. The hedge funds will unleash a sell program for no reason, and then within 25 minutes turn it around and run it higher. It's borderline, not borderline, it is illegal, but what are you going to do? It's a free market. You can't ban them. You can't do a presidential order and say, hey, all algorithmic HFT manipulative, spoofing programs where they put out a lot of fake trades are banned. Now, can't do that. It's a free market. Capitalism comes with flaws, but it's still the best system in the world. All right? Is it completely annoying and frustrating? Absolutely. But if you focus on these charts, you get to understand them, it'll make it easier on your mind. So, like I said, almost 80 to 90% of the gains happen overnight. So you're not positioned right, you're not going to make the gains. And during the day, if you're fast enough, you're going to catch some of these things off my charts, and you're good. Or if the market opens down 600 points, 400 points, we've done this so many times. Those are the best buying opportunities ever, because we know what the cap is on the downside. So Friday was one of those days. We closed here. I told you guys to add bits and pieces of the SPYs, some of you added the Qs. Remember, you got to add your own stuff too. You can't be relying on every single one of my things. You're not mimicking my book. I had a pretty sharp positive day on Friday, to be honest with you, with a bunch of selective stocks, the small ones. AT&T being one of the biggest ones, biggest winners. So the question is, you look at this thing here and you say, oh, yeah, I'm going to totally panic and I'm going to go into Costco to buy a new set of adult diapers right at the bottom of the range. Well, that's up to you. What do you want to do? Because right now, futures are up about 17 points, 16 and a half points, and this is where we are. And by the time all said and done, we're going to be here somewhere around this range here, where again, the sell programs are going to come in. Unless we get the end of the month run up, we get some more positive vibes coming out of the Chinese-US talks, and hopefully no hardcore negative tweets coming out of President Trump. In that case, we're going to bust a move and get towards where we are destined to go. We are destined to go there, one with the other, which is the upper end of the range, which we did, as I had mentioned. But immediately the sell programs came in, which is around the, couple of 100 points higher. That's the truth. It's not an easy one, but that's the truth. All right, so there's your chart. So focus on the 15-minute charts. Focus on the 1 hour chart. This is the 1 hour chart. This is what I call the swing charts. So we know what the range is. The range that the market was traveling in was around 29.89, call it 29.90 and 30. This is it, or 29.80 if you want to call it that, right there. So if you're bullish, then, and I'm still bullish. If we got real -7, the Chinese said, F you, we're never going to buy another soybean bushel of corn, and see you later, you guys all suck. Trust me, futures would be down like 30 points right now. But the Chinese have a lot to lose, and I don't think they want to keep on going with this tit-for-tat crap. All right? So if you're bullish, net, and I can show you some bullish charts as we move along on the longer term charts, then this is in between this wide uptrending channel, what we call a macro channel. This was a consolidation, and this was the breakout. Then we came back within this zone here, and now we're going back towards there. And that, ladies and gentlemen, let me change the color of this pen, is a bull flag. It's moving sideways. So if you want to buy time and you go into mid-October, late October, whatever the case may be, you don't want to buy too much time, because we don't know what's going to happen every 2 weeks later, right? So buy reasonable time. So this is what's going on. There's your macro channel, and this is this right there. Now, in between, this happened, this consolidation, which hit the bottom end of this thing and went up. So that would be a bull flag like this, what we call a consolidation channel, because people buying here, the so-called smart money buying here or at interim times as it dropped to these levels, as my charts have shown, this was the big fat breakout. Let me zoom out. There we go. This was the huge big fat breakout that happened on after hours, still after hours, on the 4th of September at 9 p.m. You can see the time there, 2100 hours at 10 p.m. Boom. So bottom line is that was an ascending triangle breakout. Technicals are not perfect, but they are as close to, especially the way I structure my chart, they're as close to some sense of normality that you can figure out on these randomly, on this structured volatility market. I say structured because they are structured. They're not random. They look random, but they're not. So here was your ascending triangle breakout. So that's a major support level right there, 2950. If all hell breaks loose, we're going to 2950. But it never makes it easy. So if futures do open up 17, all the bozos who bought a big amount of puts, they're going to get blasted out first thing on Monday morning. And like I said on Friday, read my tweet, that we're going to trigger a sharp rally on any type of positive news development. And like to show you all, because this is what we do here at Clueless Day Trading. We try to use our cerebrum, our brains a little bit in addition to playing high risk assets like options, right? I don't think there are too many services out there who do predictive forecast. They're like, oh, go with what you see. Oh, yeah, that's really exciting. Go with what you see. By the time you see it, they're going to slap the market down 200 points. By the time you see it, the market's already up 500 points. That type of garbage is fine 10 years ago. Not anymore, ladies and gentlemen. I beg to differ. And the facts on the ground agree with me. So this was one thing that I put out there. I can drag it into the screen and highlight it for you all. Okay, what did I say? It's a dragon bullish cup and handle. Let me make this bigger. Okay, it is a dragon bullish cup and handle. This thing is no longer red. This is nice and green right now after hours. So what did I say here? I said end of the week closing view, W, which is the W formation, dragon bullish, right there. You can see that. With a sideways move. That was your bull flag consolidation. Market negative. What's market negative? The slow stochastics. Down here, the slow stochastics are starting to turn back a little bit. So that is intermediate term market negative. So I put it down there. And I said any positive US-China, trade talk news over weekend will trigger massive short covering rally Monday. I'm not going to say 16 handles higher on the minis is that massive, but if we get during the night like some more positive stuff, the futures are going to open up about 25 plus points. So this is a mini massive type of move, and it was predicated based on the variables. That's what we call game theory forecasting. Many of you, 90%, 99% traders out there have no idea what game theory means. They think it's video gaming. My kid at 14 years old took game theory at CTY, Center for Talented Youth, at University of John Hopkins program. This was at one of their summer camps. And I remember sitting him down, explaining to him what game theory is. Game theory. I'm not even going to bother to explain to you guys because I have. Game theory is what makes the world work, what politics work, markets work, including life. So there we go. Let's move on. So this is your general chart, and it's still looking good. Now, when does it not look good from a slightly longer term perspective? If we completely break down below here, then we know what levels are going to be attacked. Now, short-term movements like sudden BS rumors coming out, and Larry Kudlow talking on one side of his mouth. I really like Larry. He's a nice guy. Or Peter Navarro like saying that's it. We're just going to just shut out China. Like we'll never talk to the Chinese. He's the biggest hawk on China, obviously. Very smart guy though. So those kind of things, accept it. Accept it. Not supposed to feel good. Great trades are made when you're not feeling good. Great trades where you get massive profits are made when you are not feeling good and you do the setups. Write this down in your brain somewhere. My biggest trades that I have alerted you guys have been where we have bought these structural lows and then the market takes off. That we call shooting fish in the barrel the following day or the following Monday. That's it. Accept it or just keep on suffering. All right. So bottom line is, when we look at this chart here, it is overall pretty good. Not bad. So let's zoom out, technically speaking, and see where can we go. Well, I have a feeling, because of my bullish bias on what is happening, that if and of course you guys will agree with me, I believe you will, because I'm explaining from a technical standpoint, not from an emotional standpoint. Emotionally, I want the US markets to be the strongest and the biggest and the fattest on the world. Okay? Because our financial power is what makes us great. Nothing else, guys. Money talks and shit walks. Right? Exactly. So how would you like it? Our market's down 10,000 points. Oh, no. Doesn't work like that, right? Military and economic and business, of course. And economic is business. Hand in hand. So this range breaks out somewhere above this, then we're going to make a sharp move higher. So be prepared. You want to buy the lower levels, monitor them like I always do. Look to see how oversold you get, and I'm keeping it real simple here. Don't always keep on looking at the weekly and the daily and saying, oh, the things are starting to curve down, so I'm not going to buy a 200-point move up. Like, oh my God. No. Keep an eye on the longer term picture, but trade short to medium term. Fast trade sometimes during the day or within 1 or 2 days. In between, you're going to always have to embrace and kiss the feet of these volatility programs for whatever reason. So that's it. It breaks out. It's going to make a move towards the 30, 40, possibly 30, 60. You know, those are hundreds of points higher. Not thousands of points, hundreds of points higher. You remember, one S&P point is roughly 7 to 8. So I'm going to say 8 Dow Jones points. Somewhere in that range. So if you get 10 points higher on the SP, then that means the Dow is up 80 points. Okay. So that looks pretty good. So I do have these straight channels drawn, not because I like to draw these lines, because they're mathematically precise. You know, they're hitting some major contact points. Almost here. So these are actually pointing substantially higher. Now you don't go there in one go. You go there by breaking out, and for people who trade the SPYs, the Qs, the IWMs, the DIAs, or the indices, keep in mind that once you get that break, it just doesn't keep on going forever. It tends to consolidate. That's why you get these consolidation moves. Then it tries to get back into the upper end of the channel. So bottom line is, the way I see it here, if we can bust a move over 30.55, that's going to scare the living daylights out of the hardcore quant bear funds, which there are a lot of them out there. Not to mention retail traders, but we don't control the market. It's these quant funds who are super bearish. One of them sits within Goldman Sachs called 2 Sigma. Read it up. Google it. These guys are like the ultimate shorters. I'm like, okay, great, man. Okay? And when you get these massive moves, 300-400 points, that's when they're getting blasted. So they are having a bad day that day. So that's it. So you can, this chart is actually pretty damn good. I like the way this is structured so you can see it. Let's take a look at the daily. Now this is the daily chart, and the daily chart is giving me an idea where we might go. I explained to you in the last session, so I'm not going to do it right now. We have a 3450 crossover. I like that. I like that a lot. I would like to see a turn up on the 50-day moving average. All I'm saying, first leg of the move should be 30, 30, 30, 40, which is roughly about 160 to 200 points. And we hit a major ceiling. Once you hit that major ceiling, this is what the markets will most probably do. Probably pull back a little bit, create a cup and handle, and then if the primary trend tends to go higher, and we can tell that by looking at the Bollingers and many other things that I talk about, and my advanced coaching students know very well what to look for. And if it keeps on continuing higher, that means the general primary trend will remain higher. The moving averages also will dictate which way the trend is. This is starting to slow down a little bit. The MACD, but the MACD slowing down. This slowed down here also a little bit, but the markets continued higher after that for a whole bunch of days. So I'm not going to sit here and predict, but I would say that you don't want to be super long on things by mid-October, because that's when the crap hits the fan for different reasons. It's the end of the fiscal year for mutual funds, lots of rejiggering. And by the way, Friday was quad witching too, so that was another reason why things went, prices were just random. So mid-October is very, very, very tricky. Neither do you want to be super long here, but you need to have long positions. Let's take a look at one of my preset charts that I structured, and that's the weekly. Now the weekly chart is looking okay. Yes, we are overbought, no question about it, but the uptrend is intact. And this, ladies and gentlemen, on the weekly chart is still a bull flag. Now, just because it's a bull flag doesn't mean you're not going to get like 200-point drop downs, because the Chinese didn't want to go eat corn and soybean in Montana on Friday, right? So those type of intraday volatility we have to deal with. But the weekly chart right now is nice and green. The more it expands into the red and breaks below this big breakout, that's when things start to get frothy. I mean, things start to tell me that things are not good. So this is still a bull flag. There's no way around it. Will the bull flag break out? Well, if it does, then this is where we're going, up into that, 30, 40, 30, 50 range. And if it breaks below that, then we have major support all through. 50-week moving average, blah, blah, blah. I'm watching this carefully to keep an eye on the long-term picture. Is it going to curve down? Because remember, even if it's starting to curve down, the markets can still continue higher. That's known as a negative divergence, where prices keep on going higher and the internals are showing you weakness. You can still make money as a trader. Listen, we're not running billion-dollar funds, all right? We're not Elliott Management, who's put in a couple of $1 billion into AT&T, or Starboard Partners, who are into Papa John's. Okay? We're just guys trading with small amounts of money. So don't get too academic, oh my God, yeah, market's gonna fall 3,000 points 3 months from now. Like, who cares? You're gonna feed your family? Well, if you're a professional trader, I feed my family through my income generated through trading. I'm going to say no, for 3 months I'm not going to eat, because I know I'm not going to make any money, because I know 3 months from now the market's going to fall. I'm sorry. Don't get into that mode, all right? Don't get into that mode. Trade short to medium term time frame, and keep an eye on the longer picture, because there's a lot of risk in the market. There's no question about it. There's Brexit, this U.S.-China thing completely falling apart. There is the Fed. What if they don't cut rates in the October meeting? There's an October meeting coming up. Or what if the Powell says, you know what? Yeah, everything is looking good, because the U.S. economy is generally pretty strong. So you might say, you know what? I'm going by the book. The economy is pretty strong. I'm not cutting rates. Markets will fall for 500 points. So of course there's risks. And it doesn't matter how many times, President Trump yells and calls him names, which I believe is so childish, not even funny. Seriously, guys, think about it. And you know where my political affiliations lie. I'm a big, big supporter of all the things the government is doing. But to keep on calling him names, I mean, come on, it's so friggin' ridiculous. So, and to call the whole board of Fed officials who are real economic patriots a bunch of morons, I mean, I have nothing to say. So, all right, so that's your bigger picture, all right? So enough of the market. This is the way the market is. Let's get into stocks. Any quick questions here that I can answer? Oh, yeah, I do want to show a picture on the Think or Swim version. One of the things I want to point out to everybody, things I've learned, just sharing, is it's a perspective of how you're looking at it. Now, this is a chart of the actual market, the E-minis, since the 20th. What day was the 20th? Friday. So this is Friday to today. Now, if I showed you this chart, you'd be like, okay, it's a this was Friday, 11 a.m. This is now. This is live, right? So you get this big, fat, we ain't eating corn drop, right? And this is where we are right now. Definitively, a cup and a handle. So it doesn't look that scary, does it? So it's the time frame that you look at is also quite important, very important. And if we zoom out to a 1 hour chart, for example, right? And you look at this, and this goes all the way back to, what's the date up there? August 25th. Wow, seems like when the dinosaurs were, right? August, like, wow. And you look at this chart, it looks pretty good. Even though, and myself included, these type of sudden drops intraday or overnight, boy, it's just like, here we go again. But then you keep your perspective, you sit back, you look at these 1 hour charts, and these things you guys got to do it yourself. This will help you maintain your positions and not freak out every time the market's down 300 points. Because the more you're zoomed in into the market, and there's nothing wrong with it. I'm zoomed into the market 24/7, right? Because that's my trading service. I got to keep you guys updated. As I'm looking at the 5-minute, the 15-minute, the 30-minute charts, it feels like, whoa, you're starting to get like dizzy, right? What's the word I'm looking for when you get that thing where your ears are buzzing and you feel dizzy?
Vertigo.
Thank you so much. So vertigo, you feel vertigo. Don't you feel vertigo like crap happens? It's just like, oh shit. Like, oh my God, here we go. I just bought these few calls and look at that. They're like 60 cents. Now they're 30 cents. Like, oh my God, this vertigo is like crazy. So in order to get away from the vertigo stuff, like zoom out a little bit once in a while. It's good for you, good for your position sizing, good for you not making hasty decisions. And I think that's the best piece of, I don't advise, I got to be clear about that. I suggest best piece of positive mental suggestion I can give you as a trader or as an investor. But these things are like, whoa, it's like vertigo times 20. Like somebody just hit you with a baseball bat in the head. You just get into a position, boom, sell program comes in. You're like, what? But hey, that's volatility, man. There's nothing we can do about it. I hate it. But it allows me to buy some things on the cheaper side. Think about it that way. But so that's it. Now, if you look at the daily, now we're zooming out. It's looking pretty good. It's starting to, like I said, don't have to focus too much. You know, we were starting. I want to point out one thing, and this is very, very important for many of you who are SPY traders. SPY can make a decent sum of money. Yeah, they don't go up like crazy, like 400%, unless you get these big moves. But 40, 50%, like great. So remember, we started to top somewhere around August, but the markets kept on moving higher for days and still kept on moving higher while this started to go lower. That's known as a negative divergence. Why? Internals are telling you things are weakening. This has gone red, the histograms, but the market kept on going higher. So that was a false move higher. And then you got that big shellacking that came about on July 30th. So what I would say is this is still looking good. Upper end of the wedge is there. I don't want to keep on beating the same drum. We're still good. That's all I'm saying. And who knows? In October, we might fall to the bottom end of the channel, 2,700, because Premier Xi, China, and President Trump are literally just hate each other. They just basically want to get into a shootout. We're already in a mini shootout. But they're just like, that's it. We'll never do business with China. Markets will hook 4,000 points easy. We're not in an isolated world. You guys know that. So, but in the meantime, this is what's going on. Another thing I'm noticing, and you guys should also notice, is look at this. Look at this line, please. The 34-day moving average is doing what? I need you guys to see this. Is doing what, guys? I mean, please, somebody chirp in. You know, I mean, come on.
Looks like it's going up a little bit.
Right, it's not called going up. It's called curving up a little bit, right? But you're right, it is going up. Yes. And every time it does that, markets generally tend to have multi-day or multi-week rallies. Because what it's trying to do, in my opinion, will do, and that's just my belief, because I believe the China deal will get done, or some interim deal. Nothing gets ever done finally. It's never happened in corporate America, won't happen in the world economy. Just an interim deal. It is attempting to go, it's going to cross over the 50-day moving average. And if it does that, we're going to go to that 30, 80, 3100 level fast. Okay? It's always a lagging indicator. Remember, the moving averages, why are they called lagging indicators? They're lagging indicators because it takes 34 days for prices to be computed. 50-day moving average between 50 days prices average divided by 50. So they're lagging indicators, but they do give you some signals. Let's take a quick look at the VIX. I'm not on my other computer, so I can show you that VIX did have a pop. Now, this is the danger sign. This is what we have to watch out for. The daily VIX had a pop. There's your green candle. And if things don't work out, we keep on, you know, the war escalates, the trade war escalates, companies come out with sharp earnings warnings. I can assure you, this Vixen, shouldn't say the Vixen, I'll get politically sued. The volatility index, the VIX, is going to basically hit 17, possibly hit 21. That means we'll be down 300, 400, 500 points. So I'm watching this very carefully. These technicals are starting to turn. So that means it's telling you, what does the VIX tell you? The VIX tells you whether or not we're going to see volatility in the markets, primarily on the downside going forward. So if we bust a move into the 16, 17 range, that tells you that we're going to see major volatility in October, which I think we will. Just letting you know. So keeping things close to my vest. Getting out of profits, sometimes a little bit early, fine. Because these are difficult markets to read because of the movement. So the VIX has to be watched, letting you gentlemen know. If it does this, we're going to be down 800 points, like it did back in July, end of July. So do I think it's going to do this? I don't know yet. So there's your VIX picture here, these candles. You don't need to know anything. You just have to track the candles. Now, in between, these are daily. So the VIX can come down a little bit, retest this level again. And if do get an interim deal, the VIX is going to fall around the 11 level. At that point, you want to be out of most of your longs and buy some SPY puts immediately. Immediately. Because technically speaking, you're going to see a reversal on the VIX if we fall into that 11, 12 range. And that it only happen if we get an interim deal with China. That's it. It's really that easy. Stocks. Let's take a look. AT&T for people. AT&T is going through a lot of stuff. And one of the biggest things is Singer, Elliott Management, Paul Singer. The guy is freaking brilliant. You think he gets into a company with multi-billion dollars as an activist shareholder because he wants to lose money? Oh, yeah, right. That's why he's a multi-billionaire. We're still trying to pay our PSE&G bills, right? Exactly. So bottom line is, these guys are trying to do something big. They're going to, you can be an analyst. I said analyst, right? Not analyst, because most analysts are analysts. So bottom line is that, and say, oh, well, AT&T's Dish Network doesn't, they're losing streaming members. Yeah, we all know that. What do you think he's inside the company with $3 or $4 billion? Read up on it. I put it out a long time, about 10 days ago. Because he wants to restructure the company. And if he restructures the company, this move alone was good for 222% on options. So who the heck cares what he's trying to do 6 months down the road? But it's good to know that you have these powerful people inside there trying to do the right thing. sell some assets, unlock hidden value potential, intrinsic value of the overall stock goes higher. And this move on a move of what? Like maybe, how much was AT&T up? It was up like maybe 70 cents? $1? It wasn't even up $1. It was 37.20, 37, 70 or 80 cents. And the calls were up 220 points. I want you guys to write this down in your head, okay? AT&T was up approximately 80 cents. And we didn't buy calls for this week. Those must have been up a gazillion points. We're buying October 18. We got enough time. And as we get closer to that, we'll switch it to November. So these October 18, 38 calls, October 4th, 38 calls, these are the 38 call strike price, were up 130%. The ones which were up 220% were the October 4th, 38.5 calls, which went from, it's all about making money. It doesn't matter what stock you're in, from 9 cents to 30 cents. Whoa. Okay, these were the 38.5s, and I told people to buy those too. All right, 222%. On how much? On an 80-cent move? 222%, not 22%. I love the elasticity. I love the delta and the gamma, the option characteristics of these AT&T calls. I'm learning. Every time I get into a new stock, which I really don't trade that much, I learn the characteristics of how the options move. You can get into a stock that moves up $5, $6, $7, and the options don't even do anything. A lot of biotechs are like that, and it's the most frustrating thing ever. I don't need to tell anybody because some of you have gone through that. It's very frustrating. It's up like frigging $6, $7, and the options are maybe up 30%. Like, what the hell? And here, on an 80-cent move, the options are up 130 to 222%. I like it. I love the elasticity. Bank of America lottos are like this too. Stock moves up 10 cents, they'll be up 20%. And they're cheap, so you can buy them in the money. You don't have to buy them 20 bucks out of the money like Amazon. And if it doesn't go up to like 10, 15 bucks, your options basically fall apart. So that happened at 80 cents. Now I put some great charts in AT&T, and I want you guys to basically do what you need to do. This is your daily chart. So on the daily chart, it's pretty clear. It wants to go towards 38.73. Now, one of the things I want to remind everybody, which is where I got blasted on Roku on the second time. First time I made money, and then I rolled it out onto the other ones, 136 call, got completely blasted out, is you can get a severe analyst downgrade. In the case of Roku, net, I was positive on Friday because I made money on the other sides too. But Roku, for example, is a very highly volatile stock. Charts were looking fantastic on the reflex bounce. You know the charts, please look at it on my Twitter feed. But this is guy come from Pivotal Research, which most people don't even know what Pivotal Research is, but they're good. So they said Roku should be a $60 stock. Whoa. And Oppenheimer comes out, and Oppenheimer, everybody knows Oppenheimer. They said it's a $150 stock. So you ever wonder why one guy says 150, but his stock, his call got completely washed out, but the guy who said 60 caused Roku to fall a gazillion points on Friday? Scratch your head, right? Like Oppenheimer saying 150, that's 20 or 30 bucks higher from here, and the other guy saying 60. I give up. So those are highly volatile stocks, and again, we have all types of traders. We have high-risk traders who want to scalp very quickly or love buying deep distressed real estate, i.e. distressed stock prices. So Roku's one of them. And there's other people like, oh, no, I'm never going to touch that. That company's like garbage. Oh, yeah, right. Okay. Sure. So this one, AT&T is more stable. Now, what I was trying to say was the risk is you can wake up the next morning, you have a nice position, everything's looking great. All of a sudden, you get a bombastic, crazy, like what the, WTF, whatever, what the, a downgrade on the stock. That's something I can't control. So we reapply the technicals back and see whether it's buyable or not. But those are risks that we have to live with as traders, right? We know that. So aside from that, I'm just looking at this small level. If it goes from 38 to 38.96, it's another 140%. And if it goes to 40, it's 300% on those cheap calls. Now let's take a look at the weekly. This is what I'm keeping an eye on. I've shown you guys repeatedly, and I hope that some of you are taking full advantage of it. I know some people who are taking full advantage of it. So this, forget the megaphone. Just look at the straight lines. This is where you have massive resistance, 40. Big sell programs came in. Big resistance between 42 and 43. Hey, I'll be like, I thank God for everything that happens. All right, the fact that I'm alive, I thank God. But God, I'll thank you. Like, and all my members who are going to be AT&T, they'll be thanking the trading gods, right? Like, wow, yes. So that's it. The guy, Elliott Management, Paul Singer, thinks that stock should be valued at 60. Well, it ain't going to be valued at 60, ladies and gentlemen, unless they do the hardcore measures and the board approves all the asset sales and other stuff that AT&T needs to do. And that we would have to look on the monthly charts to see if it can go to 60. Can it? I don't know. 60 is like way up here. Yeah, I can draw lines showing it can go to 60. And I don't make these lines up. Let's take a move from the 23 level. Let's find, there we go. Watch the magic, all right? Big fat line. Edit property on. Perfect. Let's do a parallel channel. And let's see what this leads us to. Drum roll. Let's have a drum roll, guys, all right? Okay, goes to 50. Doesn't even go to 60. So that's fine. Now, this is what's exciting. All the internals are saying buy me. Saying buy me, okay? This is the monthly chart. Monthly, ladies and gentlemen. This actually started when the stock was at 30. Where the hell was I at 30? I wasn't even looking at AT&T till Paul Singer came in. But look at this beautiful progression of bullish candle expansion. Isn't that nice? That is a very pretty sight, guys. If you're a trader, this is what you call a very sexy sight. Sorry, shouldn't say all that. So bottom line is this is very, very nice. Bullish candle expansions breaking above this red line here, which is the 50-month moving average. Forget 50-day, forget 50-week. This is now moving into overbought levels, which means we'll have probably another few, maybe month or two of a sideways move. This is what excites me and should excite you too. If you're making money, crossover, expansion. Now, let's do a quick bar count. Okay? Remember, each of these a month. How many months did it say and hit the peak? 1, 2, 3, 4, 5, 6. When did it do that? Well, here it's coming off the negative, right? So this is what I'm looking at. Histogram going from red to green. 6 months. This is 1, 2, 3, 4, 5, 6. 2 more months. And by that time, technically speaking, if we do manage to enter this macro uptrend channel, let me take this little itsy bitsy little lines out. Now watch this, okay? This is the range that the stock travels in year after year. Then it was supposed to do this, except it fell apart. That's why you have a megaphone. This is what your megaphone looks like. Megaphones are very powerful patterns within the context of a major structural move. Now, doesn't mean it can be down 1 day or 2 days. I'm asking you for, I'm telling people that this is a long-term swing, monthly type of thing. Doesn't matter what happens on a certain day, unless these candles turn blood red and it just totally turns down. That's a different story. But basically, now this is the range. Keep this simple. These are big money makers. 222% of the days the market was croaking and acting like it had freaking cancer. So it should, instead of doing this, it fell apart. So now it is attempting to re-enter this broad macro channel. So over a period, each of these bars are a month. The stock can first hit the upper end of the megaphone. That's 44. Hallelujah! You're gonna make crap loads of money if you you know if you have some decent money on this type of things. And remember, this has nothing to do with China. There is no direct impact on it, on the U.S.-China trade war. This has to do with restructuring play. So bottom line is that if it gets, let's say in 2-3 months time, up to 48, the upper end of the channel, before it starts its descent again, you're going to be up, if you want to look at it, I don't know, 2,000-3,000%. Yeah, at least 2,000%. Do the math, what you can do with 2,000%. Now, will it be a straight line? Absolutely not. But I'm just showing you that this zone is where the bears fear. I believe Paul Singer of Elliott Management knows what the heck he's doing. And one of the reasons the stock rallied, and I put that news out on Friday, who can tell me what it is? Anyone remember seeing the AT&T news? Huh?
I don't.
Okay. Next time, please read, because you are in AT&T. So instead of frigging panicking and selling at the wrong times, try to read that and figure out in your smart head. And I'm trying to make you money here, okay? Is Paul Singer, there was a Barron's article that Paul Singer, Elliott Management, had met with the head of AT&T in New York. That's a big thing, because AT&T doesn't like activist shareholders who want to basically maybe cut out their perks and stuff like that and make increase the stockholder value. So the fact that they met is big. That's all. So this is one. I'm giving you alternative pictures on things which doesn't have anything to do with the China stuff. Let's look at GameStop. Another major activist investor is in here. Anyone seen the movie The Big Short? Does anyone know what that movie Big Short was all about, please? I need answers or else I'm going to cut off this webinar. Does anyone know the movie The Big Short, which was based? Okay, you've heard of the movie The Big Short?
Yes.
Okay, what do you think it was about? Okay, if you don't know, I'm not going to hold you to it. I know Mike knows. I'm sure Mike, The Big Short was about the calamity that happened in 2007 to 2009 when the U.S. economy, the mortgage, and the housing market collapsed to a degree that we went in certain cases a level of economic depression. We were going to hit close to 1929. That's when the massive QE and all the money the government had to push into the market to stabilize the U.S. economy. That's the reason you all have a friggin' job right now. Okay? The Big Short was about Michael Burry, who's in GameStop. And I mentioned this a couple of times. Who is basically a short. He believes the market's overvalued. But he has picked 2, 3, 4 small companies in his portfolio. He manages, I think, $1 billion or something. The guy made $2 billion. And please, as an American, you have a duty to watch The Big Short, because then you know the real story, and it's a very entertaining movie. You know the real story of what caused the calamity in 2008, 2009. That's the problem with America. Nothing to do with you guys. Nobody knows American economics. They don't even want to know. Just waving a flag and wearing a red hat ain't going to do it, guys. All right? We need to know how to fix things. So The Big Short is about everybody gambling in the mortgage market, from gamblers in Long Island to gamblers in Nevada to gamblers in Boston, New York. No doc loans, keep on buying houses, flipping, and then the whole thing just blew up. And literally, we single-handedly, the United States of America, not that we like to say it, Literally took down the global economy because we sold all these CMOs and CDOs and all these hardcore derivative papers that were created by Goldman Sachs and JP and all these other big fat banks to guys in Finland and Norway, and they were just like, yeah, sure, you know, I mean, they're just a credible investment bank. They had no idea what the hell they were buying. Was it Finland or somewhere where the economy almost went under and they're like rich? So watch The Big Short. Michael Berry, who identified this 2 years ahead of the game, not GameStop. I'm talking about that this was going to happen. And the movie shows like how he tried to convince the big shot guys in Goldman, like, guys, he's seeing this pattern, this gambling, and mom and pop, you know, guys making like $30,000 a year, taking out $2 million loans. And he started to see that through the data. And he made a ton. And he's like the complete non-Wall Streeter. Well, guess what? He loves GameStop. So looked at it. I'm making money on it. So I'm looking, and so then I put my technicals on it. So the technical thing you got to focus on is this big gap. There's your gap. Okay? There's your gap. Stock is 7 cents. They were 3 cents. They go to 7 cents. Do the math. That's more than 100+%. So you can put a chunk of those calls, which doesn't cost you a fortune because you're not paying $3 or $13. And you, one with the other, it looks like it wants to get into the gap. And that means the stock will be up 20% to 25%. Now, there was another positive piece of news on GameStop that I put out there. I'm not going to bother asking anyone if they read it, because that's your loss, not mine, is Nintendo's new game console came out, and it's selling like hotcakes. And GameStop is obviously making a lot of money on that. And the holiday season's coming up. And this Nintendo consoles apparently are like serious stuff. I'm not a gamer, so I don't know. Some serious stuff, okay? So short term, there's a positive catalyst. Look, let's look at the technicals. That's what we're here for. So on the technical basis, whoops. On a technical basis, let me try to zoom in. Okay. This pattern is basically a cup and handle or even an inverse head and shoulder. There we go. And the upper end of the handle is somewhere around here. That's another cheap option. That great elasticity to price. In other words, price moves up 3 cents, the options move up 10%. I'm like, great. Now, vice versa, if option stock moves down like 10 cents, it's a $5. It's not even a $5 stock yet, right? What happens to a stock when it goes to 5? Dominic, you know the answer. What happens to a stock which is priced above $5?
Marginable.
Thank you so much. It's marginable. All of a sudden, big fund managers can actually buy the stock. A lot of them can't buy GameStop because under mutual fund charter, most cases, they can buy stocks less than $5. So what happens if major institutional ownership comes in? You think Michael Berry doesn't know that? The man who made billions of shorting the U.S. housing market when he tried to warn Goldman Sachs and stuff, because Goldman was doing a lot of funky stuff. So that's what I'm saying. You need these type of big name sponsorships. And he's recently you're going to be hearing a lot more about him. Check him out, Michael Berry. I think it's spelled B-U-R-Y. And just put it The Big Short and watch the movie. You'll thank me for it. So bottom line is that that at this point, technically the 50 and the 34-day moving average is looking like it wants to cross trend up, which is fantastic. Small moves in the stock. The delta is fantastic. And the gamma and the implied volatility, that means the options move very quickly. They're cheap. And if it does get into the gap, you can name your first dog after me. How about that? All right? So that's what I'm saying. So anyone who doesn't have a dog finally rescues a doggy or a puppy, they can name it after Clueless 8, because this is going to be huge. Now, in the meantime, can it be down like 30 cents one day and stop percentage-wise? That's a big move. You know, if it's down 40 cents, it's almost like 10%. Sure, but I buy time, October, November, and I like the chart. Why? Because technically, it's a cup, a handle, and now it's attempting to move higher. Now, it's a $4 stock, so a lot of retail people are in it. So sometimes they're like selling maybe 10,000 shares. So some market maker out there, now it's an electronic market maker, they'll just move the stock down aggressively lower for no reason other than somebody trying to sell maybe 10,000 shares. Get it? So that's why it needs to get into the above 5 range. It becomes marginable. At that point, you will see a lot of coverage on this. Now, keep in mind, Friday, all week last week, you didn't hear anything about AT&T, right? That's another thing you got to keep in mind. When stocks are moving under the radar and making money and they're not talking about it, is the best thing ever. So this one, I like a lot. As long as the patterns continue, as long as that guy stays in, Michael Berry stays in the game, you have a high probability of making some serious money. Let me look at, let's take a look at CLDR. I'm giving you some small cap names here, right? We did pretty okay in CLDR. CLDR is Carl Icahn's in this, hard. Not that I give a crap about Carl Icahn that much. He's a very smart gentleman. Fellow New Yorker who fled to Florida because of taxes. Yeah, New York's just a bunch of idiots, keep on raising taxes and just throw out all the billionaires. How beautifully socialistic is that? Florida's like smart as hell. Like, come on in with your billions. So Carl Icahn's in this stock. CLDR is actually a pretty great company, but they had some missteps. There's a reason why it's down from like 20 bucks. It was down to 5. This is, again, a cheap way of playing the market. This is a cup and handle. Upper end of the gap, I said the stock would go. That's exactly where it went. Once it hit that gap, it pulled back for about 3 days. Now it's attempting to go higher. Here we do have a crossover of the 34 and the 50, so that happened back in August. Since then, the stock has jumped quite a bit, percentage-wise. A stock going from 6 to 9 is a 50% move on the stock. Options are cheap. I think this is a pretty strong buy. Where does the stock go? Probably around 10 to 12. Probably attacks this downtrend number. Here's the other thing about these companies. They're all takeover targets, in my opinion, because they're cheap. They're coming off the floor. Big activist investors are in there. So they are mergers and acquisitions, chop, 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 sell a bunch of divisions, stock value goes higher, that kind of stuff. So they're M&A plays. So CLDR is another one. I just have a couple of minutes, so please, whatever you want to look at. Futures are up about 13 right now. So name one. Dominic, Mike Murphy, anyone? What stock comes to mind?
What about TWLO?
Which one?
TWLO?
Yeah, TWLO. Yeah. So TWLO is a great name. TWLO, these are great companies, by the way. And the problem with the reason why this happened, this is a massacre, right? Like on a daily. I think it's a buy, but these type of things happen where the stock just crashes, is because of the reason that I just explained at the beginning of the webinar. So I'm glad you put a software name out there. They were getting the heck out of software stock, like as if all of a sudden they were toxic. They're like Chernobyl, like, oh my God, if I put TWLO software, they're like the best, what do you call, data analytics company in the world. Everything's just going to get like toxic. So this is what these idiotic fund managers do. They were forced out of huge software names, whether it's TWLO, whether it's Zscaler, which is a cloud name, whether it's TTD, Trade Desk, which was phenomenal. They power Google's ad platforms. So the danger with these stocks are that yes, I believe that as we move forward to the latter part of the year, they're screaming buys. That's my opinion. Okay. However, they are always held hostage to massive sector rotations, like I explained on the first part of the webinar. So yes, you can buy them, but you can rest assured, you have to know that that one analyst downgrade, one sector rotation, and the stock's going to fall apart like no one's business, like Roku. Got it? So technically speaking, I like it. Why? This is crossed over. That's a positive divergence. I believe, and you got to play these stocks by specific levels. So if you buy the TWLO, the one in Splunk is another one that I mentioned, SPLK, right? Great companies. These are data mining, data analytics stuff my kid's studying. He hates it. Just kidding. But it's once you get it, once you get those financial engineering degrees, they're worth millions of dollars down the road. So work hard and get paid hard, right? So bottom line is that it's lost its 50-day at 130, the 34-day at 124. So bottom line is the stock is going to attempt to gravitate towards that. So I'll certainly put out some alerts on TWLO and stuff like that, depending on what the sentiment is on the software sector. I like this. So technically, I like it. Now, can it go through as the margin selling stop because of this horrendous drop from 135 down to 110? I'm like, what? Thank God we're not on TWLO. Is all because of that sector rotation, just so you know that. So Splunk is another one you want to put on your list. So when you play with this, just buy a little bit. Like I said, there's no perfect moments. So I like this one better. You can see this is more, this is confirming more, right? So look at that. It's a beauty. It takes out the 50-day. The next move is 134. This is 2 steps ahead of TWLO, at least in recovery mode. So more money is going into it right now. There. See that? Not fully overbought. It gets overbought when the MACD goes all the way, into heavy duty positive territory. This is good. So this is another one you want to keep an eye on. These are all great companies. The growth rate hasn't subsided. Massive sector rotation, panic, stops getting triggered, multi-million-dollar margin calls. What do you expect? That's why you get this full-scale selling. What's the beauty of that as traders and investors? It makes the price cheaper so we can buy it cheap. On that note, God bless you all. 10:18. Let's make it happen this week. And like I said, everything that I'm telling you guys, everything I've seen is everything what's going to happen on the upside or the downside. One thing I know is a constant. That thing I can guarantee is volatility. That's the only thing I can guarantee. There's going to be heavy volatility, but in between, we can still do well. Have a great evening. Thanks for attending. God bless you all.
Good night.